Welcome, grade 12s, yes, to learn extra accounting. The program that's going to make a difference to that accounting result. Yes, the big day is fast approaching. Very soon, you're going to be faced with your final year-end accounting paper. And Ashraf and Learn Extra Accounting are going to ensure that you walk in there well prepared with the right temperament. And where does this all come from? It comes from you being prepared for that exam. And how is that going to happen? By you listening to us on Learn Extra Accounting. We're going to make a difference. But we need 100% from you. We need your mind, we need your body, and we need your soul. If we have those three components, for sure, we're going to make a difference. Yes, you can do it. What are we looking at today? In today's session, we're looking at, again, a type of a fruit salad type of a question that has ratios, corporate governance, it has a bit of cash flow, and the likes. So, have I piqued your interest? If I have, then the place to be with me is on Learn Extra Accounting. Let's get right into the question and see what does it demand of us. Dynamos Limited, okay, I'm going to write this here and you know exactly what this stands for, don't you? Right, so Dynamos Limited has an authorized share capital, authorized the maximum number of shares that they are allowed to sell of 700,000 ordinary shares with a par value of 50 cents per share. Important information. On the 28th of February 2010, the end of the previous financial year, they had issued 45,000 ordinary shares, all at par value. Got it? Very important information. Notice, once again, how we go through the question so that we know exactly what is it that the question wants us to do. Use the information provided to prepare the following. The asset disposal account. And immediately, I can feel the reaction from you guys. Asset disposal? Yes, guys, asset disposal. It's easy. It's a piece of cake, chocolate cake. Come on, once you master it, you'll come back and say, definitely, it's very easy to handle asset disposal. Another very important consideration, and please listen carefully. Don't misquote me. Don't go and say, this is what Ashraf said. When you are doing the question on asset disposal, insofar as the cash flow is concerned, watch the restriction. I'm saying only insofar as the cash flow is concerned. You will always dispose of the asset at carrying value. In other words, there won't be a profit on sale of asset, and neither will there be a loss on sale of asset. Got that, guys? Clear? Clearly understood? Only on cash flow. Anywhere else in the curriculum, asset disposal would be the normal asset disposal where you would either have a profit or a loss on sale of asset, depending on the circumstances. So what you have to remember is that when you are doing asset disposal within the confines of a cash flow question, then only will the asset be disposed of at carrying value. But more about that when we come into the question. And it says there, the asset disposal account on the 30th of November 2010 refer to number 7 of the information provided. Let's get right into it. Let's get right into it and see what are we told. There's number 7. On the 30th of November 2010, Dynamos Limited sold their only vehicle for cash. A vehicle was sold for cash. The vehicle was sold at the book or the carrying value. Do you see what I'm saying? Did I not mention this? Yes, I did. Certainly I did. This vehicle was originally bought on the 1st of March 2008. The date is very important. Your dates in accounting are critical. I'm sure you love dates. I'm referring to the ones that you eat. Very nutritious. But nevertheless, if you have any other dates, be that as it may, for 80,000. A new vehicle was purchased on the same day to replace the vehicle sold. All vehicles are depreciated at 20% per annum using the cost price method. Okay, so there's the information regarding the asset disposal. Let's go into it and let's see how we're going to use the information to complete what we have to complete. Right, remember we're working on the asset disposal account, November. Right, let's look at the question once again. It told us here that the vehicle was sold, the vehicle was originally bought for 80,000 Rand. So there's the original cost price, 80,000 Rand. Immediately I go into my asset disposal account, right? My details will be vehicles, because that is what I'm selling, a vehicle, and the cost price of this vehicle was 80,000 Rand. Watch here. That's the cost price of that vehicle. In other words, if I say cost price, 80,000 Rand. Right. In my table, I've got here depreciation, I've got accumulated depreciation, and I've got the carrying value. Cost price, accumulated depreciation, and carrying value. That's the information. I'm not going further with this one here. Why? Because we said when an asset is sold in cash flow, there's no profit or loss on sale of asset. Okay. I've got that. This vehicle was originally bought, let's check the question out again, on the 1st of March 2008. So immediately I know that on the 1st of March 2008, that's when the vehicle was purchased, right? I am now working in the financial year. In other words, my financial year, this vehicle was sold on the 30th of November 2010, but my financial year ends at the end of 2011. You will clearly see that there's your 2011 and there's your balance sheet. Okay, now, what's not given to me? What was not given to me in my question? Is there anything mentioned about the accumulated depreciation in this question? Nothing, guys. Zilch. So what do? Start crying? Certainly not. Like I said, don't fear when Ashraf is near. So what do? A calculation. What's my calculation? Here's my calculation. From the 1st of March 2008 to the 28th of Feb 2009 is 1 year, right? Second one, the 1st of March 2009 to the 28th of February 2010 is the second financial year. And then I go into my current year. Okay, so now let's take this step by step. Step number one. For the first year, I'm using 20% per annum on cost. So immediately I say, first calculation, I say 80,000. Remember, I use art, amount, rate, and time. 80,000 over 1 times 20, which is my rate, over 100, times 12 over 12. If you do this calculation, you get a figure of 16,000 Rand. Okay? Obviously, you're going to do it with a calculator. The second financial year, once again, 80,000 over 1 times 20 over 100 times 12 over 12, and this will give me another 16,000 Rand. Clearly you can see that your accumulated depreciation at the start of this financial year was a total of 32,000 Rand. And immediately I put a plus sign there. Why? Because I now have to work for this current period. The vehicle was disposed of in November. So that means in this year, the financial year under review, if we start March, April, May, June, July, August, September, October, November, gives you 9 months, right? And immediately you say, watch my calculation, 80,000 over 1 times 20 over 100 times 9 over 12. Watch this one here. 80,000 times 20, that's the 16,000. Remember the calculations, but it's not for a full year. So you say divide that by 12 times 9, and your answer is 12,000 Rand. Watch this here, guys. Here's my 12,000 Rand. Add the 2, that gives me 44,000 Rand. What is the 44,000 Rand? That is my accumulated depreciation. So here, watch, accumulated depreciation. Once again, you can see me abbreviating. You're not going to be doing this in the exams. We've spoken at length about it. We're not going to be doing that. We're going to write out in full. Watch my calculation. What's my calculation? The 32,000 plus the 12,000 to give me my final figure of 44,000 Rand. Clear, guys? That's how I calculated my accumulated depreciation. Okay. What else do I know? I know that this vehicle was disposed of at carrying value. And what is carrying value? Cost price of 80,000 minus my accumulated of 44,000, which will give me a carrying value of 36,000 Rand. How did I sell this vehicle? It was sold for cash, therefore bank 36,000 Rand. There goes. I've got clearly, look at my calculations that go with my asset disposal account. Please show calculations. Clear? So there my asset disposal account is done. 80,000 on both sides. Remember that your asset disposal account is an interim nominal account. What do I mean by that? It's an account that you open up that serves a particular purpose, and then it self-destructs. It closes off. There's evidence right in front of you. No profit or no loss because we sold at carrying value. Okay? Clear? Okay. Just for information's sake, if you were doing a normal asset disposal, if your selling price was greater than carrying value, you would have a profit. And if your selling price was less than your carrying value, you would have a loss. Obviously, this only applies elsewhere in the curriculum. Moving on. The question said, use the EPS. Use the EPS, see number 3 below, in order to calculate the number of new shares issued on the 1st of March 2010. Right. Earnings per share, Remember, what are we going to be doing here? We're going to take our earnings per share, okay? And in terms of the ratio, you're going to have to use the ratio in order to calculate the number of new shares that have been issued. Okay, going back into the question. Let's go to the question and see what information do we have there. The earnings per share for the year ended was 20 cents per share. Okay? Was 20 cents per share. Clear? That was your earnings per share. Right. Now, you have to take your calculator and say, if my earnings per share was 20 cents per share, I now have to calculate the number of new shares that have been issued. Okay? And how do I do that? Remember, you take your net profit after tax. Let's go and see if we have that information. There's my net income after tax. Okay? Over my number of shares issued. So, net profit after tax was 126,000. 126,000 over my number of shares that have been issued, right? And this year is equal to 20 cents per share. Okay, this means that now we have to say that 0.2 x is equal to 126,000, right? Therefore, take my 126,000, right? Divided by 0.2, and you get an answer of 630,000. Okay, now that is the total number of shares that you were working on. But remember, the question says, calculate the number of new shares, not total shares, the new shares. So therefore, 630,000, you recall our question. What did it say in our question? It said, Dynamos Limited has an authorized share capital of 700,000 ordinary shares with a par value of 50 cents. The beginning of last year, the previous financial year, we had issued 450,000 shares were issued already. Therefore, 630,000 minus 450,000. Let me just see if I got that figure right. There's it. 450,000 minus the 450,000. So we got 630,000 minus 450, 1, 2, 3. And that gives us, oh, wrong figure there for sure. Delete that. 1 0 missing. 630, 1, 2, 3 minus 450, 1, 2, 3. And that equals to 100, oopsie daisy. That gives me 180,000 new shares were issued. Look at this grade 12s. One, you had to know the formula for your earnings per share. You had to apply the formula in order to calculate the number of shares that have been issued. Please make sure that you are au fait with that. Okay, so there's my answer. And it's worth 6 marks. That's right, 6 marks. And I'm sure you're going to get all 6 marks correct. Move on. Calculate the dividends per share for the year ended 28th of February 2011. Now, what do I need? I now need my total dividends. That's right. I need my dividends for this year. What was my expense in respect of ordinary share dividends? Let me look at my information and see what do I have. Number 4. Interim dividends, interim during the year, dividends of 50,400 were paid during the current financial year. In other words, during this year, we paid an interim dividend of 50,400. Immediately I know now that one of my dividends is the 50,400, which was my interim dividend during the year, plus, which is my other dividend, my final dividend. That's right. And where do you think I'm going to find that one? Let's see here. Do I have enough information regarding that there? Yes, I do. Where is it? Shareholders for dividends. This is critical. So, make sure you're on the same page with me. Watch this. If I'm working with the cash flow, then remember, it's always about comparisons. And it's always 1 year against the next year. Therefore, grade 12s, I insist that you take your pen and you draw an arrow indicating so that you clearly know that that's the beginning of the year and that's the end of the year. Beginning of the year is 2010, end of the year is 2011. Ashraf refers to this as the love arrow in accounting. And you, I'm sure, know that if a love arrow is misdirected, it creates havoc in your lives, isn't it? So therefore, the same applies in accounting. If this arrow is misdirected, definitely your calculations are all going to be wrong. So make sure that you know which is the beginning of the year and which is the end of the year. You have no guarantee that it's always 2010 or 2011. It could have been 2010 and 2011 in the opposite way. Then definitely your arrow would have changed direction. Please, guys, I insist on that. Okay, where were we? Shareholders for dividends. My shareholders for dividends at the end of the year is 88,200. And we all know that that was debit ordinary share dividends, credit shareholders for dividends, isn't it? That's how I declare my final dividend. So therefore, 88,200 is the second part, and that is my final dividend, which is 88,200. Here goes 50,400 plus 88,200 is equal to 138,600. 100, let's get that pen, 138,600. That will be my total dividend, divided by the number of issued shares. And remember, we calculated it, didn't we? 630,000. Okay? And if you do this calculation times 100 over 1, which is your cents calculation, so there we have it, times 100 divided by 630, 1, 2, 3, and my answer is 22 cents. 0.22 cents. Make sure you write it down, because if you write 0.22 what? You have to specify that you worked on 100 cents or 0.22 rands. If you put a rand sign in front to indicate it's 0 rand and 22 cents, Always indicate in your answer what are you referring to. It's the safest option. It's the best thing to do. Indicate in this case here 22 cents per share. Clear? Right. We've done asset disposal. We've done the earnings per share using the ratio, and we used the dividend per share ratio to calculate our dividend per share. Let's go on to the next question. Give one reason why shareholders would be happy with the dividend policy of this company. Why would they be happy? Remember, they are receiving a dividend of 22 cents per share, right? So here, let's write it down. They are receiving a dividend of 22 cents per share. Now, if you take this here and you calculate it, it amounts to almost 40% of the par value of your shares. And certainly, without doubt, they would be very happy with this dividend policy. Why? Because they're receiving a large portion of a dividend, and they would be very happy. And also, your short-term investors, those that come into the market for a while, buy the shares and move off, would definitely be more than satisfied with this return, with the dividend policy of this company. Okay? So you have to give the reason why, because obviously you can see it amounts to more than 40%, or exactly 40% of the par value of those shares. Okay, the next question says, discuss one reason why shareholders would be unhappy with the dividend policy of this company. Now this one here, watch the reasoning, watch it carefully so that you have a clear understanding. My earnings per share was 20 cents per share. That was the earnings per share. My dividend per share amounted to 22 cents per share, based on my previous calculations. Now, immediately, you can see something's not right somewhere. What am I referring to? And this understanding would make you see that the relationship between your EPS and your DPS. There's a relationship between these two. In this financial year, each share had an earning of 20 cents per share. But the dividend per share was 22 cents per share. What have they done? This company has not retained any income. Very, very important, guys. Clearly you can see, not only did they not retain any income, but they've also used previous year's retained income. Why? Because your dividend per share is greater than your earnings per share. So not only did they spend or allocate everything this year in terms of a dividend to the shareholders, but they also took from previous year's retained earnings and used of that to give dividends to shareholders. So please understand that companies have to retain incomes. Why? For future expansion, for equalization of dividends. Keep that at the back of your minds. Look at the type of question. A very interesting question, right? Albeit for 2 marks, but a very interesting question. Okay, dokes, let's move on. The question says, prepare the cash flow statement. Cash flow? Am I supposed to do a cash flow? Yes, you are supposed to do a cash flow. Again, you go into panic mode because it's cash flow. Come on, guys. Once you get into it, once you understand the cash flow, I promise you, you'll actually enjoy doing it. Yes, you definitely will enjoy doing it. Break the barriers that you have against the cash flow statement. Break them. And sit here with an open mind. And Ashraf will definitely make you understand the cash flow if you pay attention. Here goes. Watch. We always start with a cash flow statement by doing the notes first. The same with your income statement. You always do your notes before you start with your income statement. The same applies to your balance sheet. Yes, when you are doing a balance sheet, do your notes first if they are required, and then you continue with the face of the balance sheet. The same would apply to your cash flow statement. Okay, now, what is it that I need to do? Let me see which notes do I have here. I have this note here, note number 1. The reconciliation between net profit before tax and the cash generated from operations. I start off with my net profit before tax. Here goes. Let's find that figure. Net profit before tax, 180,000. Notice this figure is given to me. So therefore, immediately I say net profit before tax, 180,000. That's my net profit before tax. Clear? Now, my adjustments in respect of the following. What do I need to do? Yes, in this case here, in the answer book, there are 2 items that you must add back. One of them is depreciation. Why? Because depreciation is what we refer to as an imputed expense. An imputed expense. What do we mean by that? It is an expense that does not affect the flow of funds. No money is changing hands. No money is leaving the business. This asset of mine was worth 20,000, is now worth 18,000. The 2,000 rand depreciation is my imputed expense for this year. I did not pay anybody 2,000 rand. The value of my asset decreased by 2,000 rand. Got that? Great. Okay, so let's look at the question. Do I have information? There goes. Depreciation on vehicles, 22,392. So 22,392 plus, remember, it's total depreciation. Depreciation on my equipment is 5,728. So plus 5,728. Let's add that up. 22,392 plus 5,728 is equal to 28,120. 28,120 is my total depreciation. Once again, why do I add back depreciation? Depreciation is an imputed expense, an expense that does not affect the flow of funds. No money is changing hands, therefore add it back. Got it? Don't forget it. Remember it, in fact. Okay. The next one that I add back is my interest expense. But now you must be asking the question, but certainly interest is paid. What has Ashraf smoked? His socks or something? Why must I add back interest expense? You have to add back your interest expense. Reason? Remember, in accounting, there's rationale. For everything that we do, there's a reason. Why do I add back my interest expense? I add back my interest expense because it is not an operating expense. It's a financing expense. And therefore, I add it back here and subtract it elsewhere. Notice, depreciation is just added back, period. But interest expense is added back here to be subtracted somewhere else. Why? What's the reason? Interest expense is not an operating expense, it's a financing expense. Okay, let's find it. Do I have my interest on loan? There goes 12,000 Rand. There's my figure. So I add back my 12,000 Rand for the interest. Right? So the two amounts that I add back are the 28,120 plus the 12,000. Let's do that. Plus 12,000, which is equal to 40,120. Okay, so 40,120 is this figure here, 40,120. Clear? That's how I arrived at the figure of 40,120. What must I now do? I now add my 40,120 to my net profit before tax plus 180,123, and this gives me a figure of 220,120. 220,120. That's my operating profit before changes in working capital. Okay, now I come to working capital. What is it that I need to take into consideration? I need to look at three things. I need to look at my inventory, I need to look at my debtors, and I need to look at my creditors. In other words, I'm also referring here to, this could be trade and other receivables, and this could be trade and other payables. Clear, guys? Now, you want an easy way to remember this, isn't it? So therefore, Ashraf's going to teach you some French. That's right. This is not a French lesson. This is an accounting lesson. A, I, U, L, I, G. And the second one, A, D, G, L, D, U. Now, what is that? Ayulich and Edgledu? What does it mean? With reference to accounting, watch what it means. When an asset increases in value, what impact is it having on my cash? It means that my cash is being utilized, and it also means that U symbolizes, watch, can you see a bracket, which I will complete by making it a U? So therefore, whenever we are utilizing funds, we will ensure that the figure appears in a bracket. Please, guys, to indicate an outflow of funds. When a liability increases in value, we are generating funds, we are getting money. So it's a positive. Remember, it's about cash flow. It's about money coming into the business and money flowing out of the business. So therefore, when an asset increases, we are utilizing. But when a liability increases, we are generating. Let's take the opposite. When an asset decreases in value, we are generating funds. And when a liability decreases in value, we are utilizing. The U tells you what? That figure must have a bracket to indicate that money is leaving the business. So now, I'm sure you're going to remember these two words. Ayulir and Edgledu. They definitely aren't French. They are acronyms for for what we use when we are calculating our changes in working capital. Here goes. Right? Let's start with our comparison. The first one that we're going to compare is our inventory. There's my inventories. What's happening to my inventories? Remember the love arrow? We've spoken about it. We've alluded to it. My inventories were 86,200 are now 116,150. What happened to my inventories? My inventories increased in value. Assets increase, we know it's a utilized. How much did we utilize? Let's get the figure. It was 116,150, 116,150 minus 86,200, 86,200, and your answer is 29,950. Okay, so 29,950. Did my asset increase in value? Certainly it did. And when an asset increases, we are utilizing. Watch my bracket. That's it. When an asset increases, it increased by 29,950. Therefore, we have a bracket around that figure to indicate an outflow of funds. Next one. Debtors control. It was 66,000, is now 63,000. Watch my comparison. Can you see my debtors are decreasing in value? They were 66, are now 63. By how much? 3,000 rand. So 3,000 rand. And what rule do we know? When an asset decreases, we are generating a positive. The last one there is my creditors. What has happened to my creditors? It was 28, is now 35. What happened to it? My creditors increased, liabilities increased, generated. How much did we generate? We generated 7,000 rand. Okay? So clearly you can see from this here, a negative 29,950 and a positive 10,000 rand will give me a negative 19,950. Let's go here. Let's take that figure of 220,120, 220,120 minus 19,950, 19,950, and my answer is 200,170. 200,170. I have now completed my note number 1, which was the reconciliation between profit before tax and cash generated from operations. Well, grade 12s, we're on track. We're moving on cash flow. We are, in your terms, in your terminology, we are boosting, but we need to boost further. So let's take a break. Be back in a while and we'll continue with cash flow. Stay tuned. Welcome back, grade 12s. Yes, remember, just before the break, we were boosting on cash flow. Isn't that correct? Yes, let's continue boosting. Why? Because we want to make sure that we understand this section. Why? Why do we need to know the section? Take every past exam paper in accounting without fail, and you will find that a question on cash flow is a definite question. So we need to prepare. And in order to do that, we need to know our cash flow. What were we doing? Just to recap very quickly, we were busy with a reconciliation between profit before tax and our cash generated from operations, and we completed that note, and we had a final figure of 200,170. Right, so therefore, we can say that cash generated from operations 200, what was it? Let's get back to it. 200,170. 200,170. Okay, that was my cash generated from operations. Right, what else do I need on my cash flow? I need my interest that has been paid. Remember that when you are calculating the interest that has been paid, let's look at the question. And we also notice in the question, I'm sure they told us something about the interest. Let's find that information. On the 28th of February, Dynamos Limited had a loan from a director of 75,000 Rand. The balance of this loan is 132,000. We'll come back to that. This loan agreement stipulates that the interest is to be capitalized and the repayments of 1,200 per month are to be made to the director during the year the loan was also increased. Okay, what are we going to do now? We're now going to slot in the interest that has been paid. Okay? Let's get back to this question here. Our interest paid, remember, on the face of my cash flow statement, I need to indicate the interest that has been paid. But for a while, I'm not going to touch it now. I'm going to come back to it. Reason, it's going to impact on these items here under my financing activities, the increase in the proceeds from the loans. I'm going to do all of that, and then it's when I will do the interest, right? So I'm going to go directly into my dividends that have been paid, this one here. Now, you will notice when I calculate my dividends paid, I need to know two accounts. Which are my two ledger accounts that I need to be au fait with? One, my shareholders for dividends. Now remember, this is a calculation, and by all means, you can now abbreviate. The second one that I need to know is my ordinary share dividends. This is my balance sheet account, and this is my nominal account. Okay, now look at my shareholders for dividends. Let's go to my question. My shareholders for dividends has an opening balance of 40,000 opening balance. Therefore, shareholders for dividends, my opening balance here is 40,000 Rand. Got it? Okay. And the closing balance is 88,200. Therefore, the closing balance, remember, 88,200. What was the amount? Let's just verify. That's correct. 88,200. So I've got my opening balance and I've got my closing balance for my shareholders for dividends. Now, let's understand this account. Clearly, if that was my balance last year, then I must have paid 40,000. There's the one bank figure. And this was the entry to record my dividends at the end of the year. What was it? Debit ordinary share dividends, 88,200. Credit shareholders for dividends. There's my entry for my final dividend. So obviously this account would then be balanced and you would end off with the 88,200 balance there. So from this account here, from the shareholders for dividends account, I can see that I paid 40,000. Now, if you look at your question, you will notice that there was some information that they gave me regarding my dividend. Let's find that information. What did they tell me? They told me, number 4, interim dividends of 50,400 of 50,400. That one. These were paid during the current financial year. Okay, so if that was my interim dividend, watch this, guys, here. This means that this one here of 50,400 was another bank figure, which was my interim dividend that was paid during this year. Now, in order to calculate your dividends paid, what's the secret? Come on. Ashraf's going to share a secret. I've shared many secrets with you. One more will make a difference. What is this one here? You concentrate on two figures. Last year's final, there's it, the 40,000 is the amount that you've paid this year, and this year's interim of 50,400, this year's interim, that's it. Those two figures will make up your dividend that you have paid. The total is 90,400. Now remember, grade 12s. To calculate your dividend paid, it has two components in it. What are my two components? Last year's final and this year's interim. Yes, there are other methods that you could employ to calculate this dividend. At the end of the day, as long as you understand it, use whatever method you are okay and happy with. I'm saying do the understanding of it so you know exactly this is how I calculate my dividends paid. So the total is 90,400. Let's go into this one here. Where is my this 90,400? Dividends paid 90,400. If you were not asked to do the note, then a good practice would be to do it here. And what would that be? That would be 40,000 plus 50,400. 40,000 plus 50,400, that will give you your total. So remember, if the note was not asked for, then excellent accounting practice. Show calculations in brackets. Very, very important. Remember that one. Okay, now I need to calculate my taxation paid. Once again, what's my taxation paid? What do I want to calculate? The amount of tax that has been paid this year. What do? SARS income tax, my balance sheet account. Step number one, always look at procedure. Understand a cash flow is about procedure. What's the modus operandi? What's my method of operation? Very important. Once you master that technique, I promise you, your cash flow will be pie. Watch. Step number one, get your opening balance. SARS income tax, opening balance, 4,000 Rand, credit. Therefore, SARS income tax, opening balance, 4,000 Rand, credit. Watch the SARS income tax. It could have a debit or a credit as an opening balance. So be careful when you are doing it. Read the full question. Okay, step number two, look for your closing balance. What's my closing balance? SARS income tax, 5250, a debit balance. So therefore, closing balance is 52, what was the figure? Let's get it again. 5250, 250 is my closing. Remember when we said my closing balance being a debit balance, it means that above the line, it's on the credit side to be brought down as a debit balance. Please, above the line on the credit side, because the closing balance is a debit balance. Okay, what have I got? I've got my opening balance of 4,000. I've got my closing balance of 5,250. Step number 3, what do I need? My income tax for the year. In this question here, I'm told net income before tax 180,000. There's the figure. And my net income after tax is 126,000. So therefore, 180, 1, 2, 3, minus 126,000. That's right. Gives me a figure of 54,000 Rand. What is the 54,000 Rand? The 54,000 Rand, grade 12s, is my income tax expense for this year. From where? Net income before tax, net income after tax. Amount, 54,000 Rand. Watch here. Put in my income tax figure of 54,000 Rand. Why? My double entry is debit income tax, credit SARS income tax. What do I now have? The 54,000 plus the 4,000 plus the 5,250, and my answer is 63,250. Watch here. 63,250. What is this here? This, voila, is my bank figure. The amount of taxation that I have paid, 63,250. Clear? Therefore, taxation paid, 63,250. 63,250. That's my taxation that has been paid. Clear? Okay, so I've calculated my dividends paid, I've calculated my taxation paid. Once again with the taxation, if the note was not required and if it was not asked for, please, grade 12s, I humbly appeal to you, show your note how the 4,000 Rand plus let's get that figure here so we know exactly what we're talking about. It's the 4,000 plus the 54,000 plus the 5,250. So therefore, indicate 54,000. Let's enter that figure first there, plus the 54,000. There's my 54,000 plus the 5,250, and that would give me my 63,250. So clearly you can see when a note is not required, ensure that you do the calculation in brackets. What's the reason for that? Why am I harping? Why am I nagging on this here? Because definitely you would get part marks for items that appear alongside. If the answer is perchance it's wrong, you would get part marks for any calculations that you show in brackets. Okay, let's go to the next one. Purchase of tangible or fixed assets. Once again, there's something that I want you to see here. Start off by doing the following. You are talking about your asset at carrying value, isn't it? That's right. It's your asset at carrying value. Take your information. What information do you have? Here's my information regarding my asset at carrying value. Watch that. It's at book value. So my opening balance is 246,200. So therefore, opening balance 246,200. Remember, the T account is magic. It works wonders. Make sure you understand your T account, because all your calculations would become very, very simple. There's my opening balance. Look at the procedure once again. How do I go about looking for information? What else do I need? I now need my closing balance. What was my closing balance? 322,000. Okay, so closing balance 322,000. Got my opening balance, got my closing balance. What else do I know? Come on, guys. Regarding the asset, I need to put in the asset disposal at carrying value. Do you recall we sold the vehicle? Do you recall that we sold it for 36,000 Rand? Yes, that's right. If you looked at the first part of our answer in the asset disposal, let's go there so you can see what I'm talking about. Further back, it was the first part of our answer. There's it. Asset disposal, there's my figure. 36,000 Rand is what I disposed the asset at. Therefore, coming here, can you see proceeds from sale of fixed assets? Do I have my amount? Certainly I have. That amount is 36,000 Rand. I generated funds, so it is a positive. Okay, carrying on with this one here. There's my 36,000 Rand, the disposal of the asset. In this asset account, you have to indicate opening balance, you have to indicate closing balance. Done that. You have to indicate the asset disposal at carrying value, not the cost price, at carrying value. And you also have to indicate your depreciation. So therefore, guys, look at your depreciation. We did the depreciation, didn't we? Let's check it out. Our depreciation was here. 28,120. Therefore, let me just get that figure again. Where's my depreciation figure? It's in the next one here. My depreciation 28,120. Therefore, 28,120. Let's go back. 28,120. So, once again, opening balance, closing balance, my disposal at carrying value, plus my depreciation. Watch what I do now. Start off by saying, fine, take the 322,000, right? Plus 28,120 plus 36,000 is equal to that, minus 246,200, and my answer is 139,920. Remember, 139,920. What is this here? That is your bank figure. That is the purchase. 139,920. 139,920 is my outflow of funds. That was the purchase of my tangible assets. Remember, the note was not required. It is expected of you to show that entire calculation in brackets. Which one am I referring to here? 322,000. And how would you show it? Because of space constraints there, I'm showing it to you here. This is what you'll do. Open bracket, 322,000 plus 28,120 plus 36,000 minus 246,200. There goes, guys. That calculation you would show alongside there to get your final answer, right? 139,920 minus 36,000 is equal to 103,920. 103,920. Remember, a negative. Why? Because a negative 139,000 and a positive 36,000 gave you a 139,920. Okay, got that? Brilliant. Let's carry on. We're coming now to the financing activities. What does that deal with? An increase or your proceed from your loan, your repayment of your loan, as well as the proceeds from shares that have been issued. Now, let's do the shares that have been issued first. We know, we calculated that we sold 180,000. Do you recall from the very first question we calculated? 180,000 shares were sold at, what was the price? That's important for us to take note of. Here, on the 28th of February 2010, we had a loan from the director of 75,000 Rand. Opening balance. Immediately. Loan, 75,000 Rand. Got it? Okay. Number two, the balance of this loan is 132,000 on the 28th of February. 132,000 indicating to you now that this is your closing balance, 132,000 Rand. Remember, closing balance first on the debit side to be brought down on the credit side, 132,000. So I've got my opening balance, I've got my closing balance. What else do I know? The loan agreement stipulates that the interest is to be capitalized and that repayments of 1,200 per month are made to the director. Repayments of 1,200 per month. Okay, so immediately I say 1,200 times 12 will give me a figure of 14,400. Watch this here. 14,400, the 14,400 is my repayments that I have made on my loan. So there's my one bank figure, 14,400. Okay, now let me take that figure of the 14,400 and slot it in. Repayments of loan, we had here 14,400. Right? Do you remember that they told us that the interest amounted to 12,000 Rand for the year? The interest amounted to 12,000 Rand for the year. So therefore, watch this here. Interest here, we've got a figure of 12,000 Rand. And that the interest was capitalized, therefore here we got our 12,000 Rand interest on the loan. Clear? So you can clearly see, what do I have in my loan account? I've got an opening balance of 75,000. I've got a closing balance of 132,000. I've slotted in my bank figure of 14,400, which was my repayment, and that figure also appears here under my decrease in repayment of loans, 14,400. The interest that I capitalized here, I've showed it to be 12,000 Rand. Remember, all these figures here are figures that I am subtracting, right? Okay, now coming back to my loan account, let me find my missing figure. Start off by saying 132,000 plus 14,400 is equal to that, minus 75,000 minus 12,000 and 59,400. What is my 59,400? Here goes. My 59,400 is the proceed of my loan. 59,400 is the proceed of my loan. Remember, amongst my financing activities, I have proceed of my loan, 59,400. I have the repayment of the loan. Remember, that figure was what? The 1,200 times the 12 to give me the 14,400. And the proceed of my shares issued were that figure there. Let's get a cumulative figure for this whole component here. It is the 59,400, which I have there, plus 126,000 is equal to that. And then I must subtract 14,400 minus 14,400. And my answer is 171,000. Okay, so 171,000 is that figure there. What have I got now? What do I have in front of me, grade 12s? Let's look at this. I can calculate my operating activities by doing that calculation there. I've got my investing activities, I've got my calculation there, the 103,920. I've got my 171,000 from my financing activities. Let's do this one here. The 200,170, 200,170 minus, what am I subtracting? 12,000 is equal to that, minus 90,400 is equal to that, minus 63,250, and my answer is 34,520. Okay, so let me write that in, 34,520, 34,520. Okay, I now have 34,520 as a positive. Take my other component, plus 171,000, add it, plus 171,000 is equal to that, minus 103,920, 103,920, and your answer is 101,600. Okay, now what are we going to do with the 101,600? Watch here. Watch this closely. My net change in cash and cash equivalents is 101,600. 101,600. Okay. What was my cash and cash equivalents at the beginning of the year? Let's find it. Cash and cash equivalents at the beginning of the year was an 8,000 Rand credit. Remember that. 8,000 Rand credit. So therefore, 8,000 Rand credit. Let's do the maths. 101,600 minus 8,000, and my answer is 93,600. 93,600. Watch this closely. Cash and cash equivalents at the end of the year, 93,600. 93,600. Voila. Amongst other great feelings is when your cash flow works out. There's it. You've seen, we've put in a lot of effort into this cash flow. Please make sure that you understand it. Work through your cash flows and make sure that you understand exactly what is going on. Okay, let's move on to the next part of our question. That's the end of cash flow, guys. I'm sure you have a much better understanding of it now. And the way you're going to understand it better is by practicing, and continue practicing. Understand something. While we're at it, let me just tell you the way it is. Accounting, you cannot read. You can read until the cows come home. The only thing that will improve, maybe, is your vocabulary. As far as accounting is concerned, it's an active subject. You saw Ashraf putting pen to paper. That's how you practice accounting. And I'm sure you're doing that. Let's move on with our question. The next part of the question is analyzing an audit report. Briefly explain why this audit report. Let's find the audit report there for you. There's the audit report, right? It says, the question says, briefly explain why this audit report is addressed to the shareholders. Come on, guys. The external auditor, your external auditor, or your independent auditor, is appointed by whom? Is appointed by your shareholders. Remember, they are accountable to your shareholders. Why is that? They have been appointed by the shareholders to do what? To express an opinion on the financial statements. In other words, the shareholders own the company. The directors are the arms and the legs of the company. But it is the shareholders who own the company, and they need to know, is their investment safe? And therefore, this audit report is addressed to them. They have appointed the external shareholders. Right, next one. Briefly explain the significance of the reference CASA. Would you ever go to a medical doctor who does not have a reference to his or her qualifications behind his or her name? Certainly not. Therefore, the reason why they have CASA after their names, to give you confidence that, listen, I'm a qualified accountant. I have my CA, I've passed my board exams, I've done the necessary, and you're coming to the right guy, you're coming to the professionals. Therefore, the name CASA would give you confidence as a reader of a financial statement that this hasn't just been checked by anybody, it has been checked by a CA. It means this person knows his or her story. Okay? Therefore, the reference to this is, it will give you peace of mind. It will give you surety that this has been done by a professional. Okay, next one. Briefly explain how the firm Mullah and Patel, no family of mine, arrived at the opinion expressed in this report. Give 2 points. Yes, what would they have checked? Obviously, they would have gone through some of the journals. I'm just giving you a few examples of what they could have done. They could have gone through source documents. Understand, grade 12s, that your external auditors do not check from page 1 to page 5,000. No, they check from certain page to a certain page. Let's see if they mention it here. Let's just see if they mention anything here. Okay, it's not mentioned here, but obviously they check certain page to a certain page. And this means that they've done a test basis. They've done it on a test basis. Okay? So they could check some journals, they could check documents, they could check some statements, depending on whatever they needed to check, depending on what they found. That would tell them how deep to delve into the audit itself. Therefore, guys, you can clearly see that the auditors, your external auditors, are expressing an opinion. They are saying, in our opinion. Watch this here. In our opinion. Can you see limitation of their role? The financial statements fairly present. That takes me on to the next question. What type of audit report did Maponya Limited get? Yes, they got what we call an unqualified report. Please make sure you understand this terminology. Amongst your reports, you get a qualified, you get an unqualified, and you get a withdrawn or a withheld report. Let me explain. Unqualified is a good report. Another word that I've come across reading financial statements is an unmodified report, meaning the same thing. It hasn't been changed. There was no need to make changes to it. That means it's a good report. Then you get a qualified or a modified report. That means it's fine, but the but tells you certain things need to be changed. And finally, the third type of report is withheld or a withdrawn report. That means it's so bad, I'm not even prepared to report on it. Should the shareholders be satisfied with this report? Certainly. Why? It mentioned fairly present. It also mentioned that it's in accordance with GAAP. Let's see if it mentions that. In accordance with your IFRS, there's it, your International Financial Reporting Standards. It also mentioned that it's in accordance with the Companies Act of South Africa. So obviously they should be happy with that report. What action will be taken by bodies such as SAICA against Mullah and Patel if they are accused of being negligent in issuing this opinion? What consequences will be there for Mullah and Patel? Remember, after they are investigated, and if they were found to be negligent, they could be struck off the roll, they could lose their license to operate as independent auditors, they could be sued, they could be taken to court, they may not be reappointed, and a host of reasons. I'm sure you can master it. Well, grade 12s, the end of another lesson. And here we've done very important work. Please ensure that you master this section. You will notice, as I alluded to early on, it appears very often in your examination papers in accounting. Well, guys, time to say goodbye. And what does Ashraf say? Aim for the moon, because if you don't get there, definitely you could still be a shining star, an accounting shining star. Until next time, keep your feet on the ground, be good, practice, aim for the A in accounting.